Navigating the oil industry, key trends shaping 2025. Welcome to the channel. Today, we're diving into the key trends shaping the oil industry in 2025. From production strategies to sustainability efforts, geopolitical shifts, and emerging technologies, the industry is going through a major transformation. Whether you're an investor, an industry professional, or just curious about the future of oil, this video will break it all down for you. Trend 1. Capital discipline and shareholder returns. One of the biggest shifts in the oil industry right now is a renewed focus on capital discipline. In previous years, we saw a rush to expand production as oil prices rebounded post-pandemic. However, many of the major oil companies, including ExxonMobil, Chevron, and BP, are now prioritizing profitability over aggressive expansion. What does this mean? Instead of spending billions on new drilling projects, these companies are being more selective, focusing on high-yield, low-cost projects. This is great news for investors because it means higher dividends and stock buybacks. But it also means that we're unlikely to see a massive supply boom unless oil prices skyrocket. This strategy also stems from uncertainty in the global energy market. Companies are hedging their bets, ensuring that they remain profitable even if demand fluctuates in the coming years. Trend 2. Mergers and acquisitions on the rise. The U.S. upstream oil and gas sector saw an incredible $105 billion in mergers and acquisitions in 2024. While that's slightly lower than the record-breaking activity of 2023, it's still a sign that consolidation is in full swing. Large oil companies are looking to secure valuable assets in major shale regions like the Permian Basin, Eagle Ford, and even the Williston Basin. Smaller independent drillers, struggling with rising costs and market volatility, are increasingly becoming acquisition targets. This consolidation could lead to greater efficiency, but it also raises concerns about competition and pricing power. With fewer companies controlling more production, could we see a shift in pricing strategies? That's something to watch closely in the coming months. Trend 3. Production increases amid earnings decline. Despite some financial struggles, production levels continue to rise. In fact, companies like ExxonMobil and Chevron have reported record-breaking output. Exxon hit its highest net production in over a decade, while Chevron set new annual records. So why are companies ramping up production even as earnings fluctuate? One key factor is the cost efficiency of new technologies. Advanced drilling techniques, improved fracking methods, and better data analytics are allowing oil companies to extract more oil at lower costs. At the same time, geopolitical factors, which we'll discuss in more detail later, are keeping oil prices relatively stable. This gives oil companies confidence that demand will remain strong, at least in the short term. Trend 4. Energy transition and decarbonization efforts. Even though oil is still a dominant energy source, there's a clear push toward sustainability. Governments, investors, and consumers are all demanding cleaner energy solutions, and oil companies are responding. Many major oil companies are investing in carbon capture technologies, hydrogen production, and biofuels. For example, BP and Shell have announced massive investments in renewable energy projects, while Exxon and Chevron are leading the charge in carbon capture and storage initiatives. There's also a shift in the way oil companies are branding themselves. Instead of being seen purely as fossil fuel producers, many are now positioning themselves as broader energy providers, offering a mix of oil, natural gas, and renewable solutions. However, the transition isn't happening overnight. Fossil fuels will still be a crucial part of the global energy mix for decades. The question is, how quickly will companies be able to adapt without sacrificing profitability? Trend 5. Geopolitical tensions and market volatility. Global politics play a huge role in the oil industry, and 2025 is no different. From OPEC+ production decisions to ongoing tensions in the Middle East, international factors are shaping oil prices and supply chains. One of the biggest questions right now is how OPEC+ will manage production levels. In 2024, the group made significant cuts to stabilize prices, but will they continue that strategy in 2025? If demand weakens, we could see more cuts. But if prices surge, some members may push to increase production. We also have to consider the role of the US and its relationship with oil-producing nations. Sanctions on countries like Russia and Iran continue to impact global supply, while political instability in key regions could disrupt production at any time. For consumers, this means that gas prices could remain unpredictable. Even with domestic production increasing, global factors will continue to influence what you pay at the pump. Trend 6. Technological advancements in oil extraction technology is playing an increasingly important role in oil production. AI-driven analytics, automation, and improved drilling methods are making oil extraction more efficient and cost-effective. For example, companies are using machine learning to analyze drilling data in real time, optimizing production while reducing waste. Automation is also helping to lower labor costs and improve safety, especially in offshore drilling operations. Another major development is enhanced oil recovery, or EOR. This involves injecting gases or chemicals into oil wells to extract additional crude that would otherwise be left behind. As oil companies look for ways to maximize output without new drilling, EOR is becoming an essential tool. With these innovations, the oil industry is proving that it can adapt and evolve, even as it faces pressure from renewable energy sources. Trend 7. The future of oil demand. One of the biggest debates in the energy sector is how long oil demand will continue to grow. Some analysts predict that we're nearing peak oil demand, while others argue that developing countries will keep demand strong for years to come. The reality is likely somewhere in between. While developed nations are pushing for cleaner energy solutions, countries like India and China are still increasing their oil consumption. Industrial growth, population expansion, and infrastructure projects all require massive amounts of energy, and oil is still the most reliable source. At the same time, the rise of electric vehicles and alternative fuels is putting pressure on long-term demand. The question is, will technology and policy changes outpace traditional oil consumption? Most experts agree that oil will remain a critical part of the global economy for at least the next 2 to 3 decades. The key for oil companies is finding ways to remain profitable while adapting to the changing energy landscape. Conclusion: the oil industry in 2025 is at a fascinating crossroads. On one hand, we're seeing record production, major mergers, and technological advancements. On the other, companies are facing pressure to decarbonize, manage geopolitical risks, and navigate an uncertain demand outlook. What happens next? That depends on how quickly the industry can balance profitability with sustainability, and how external factors like policy changes and global events shape the market. If you found this breakdown insightful, be sure to like and subscribe for more deep dives into the energy sector. Let us know in the comments, what do you think is the biggest challenge facing the oil industry in 2025? Thanks for watching, and we'll see you next time.